Good afternoon, everyone. We're back again live from our Los Angeles headquarters. This is Jeff Dorman, Chief Investment Officer at Arca, joined out of our New Haven office by Nick Hotz, one of our research analysts at Arca, who's done a lot of work on the macro front as well as analyzing layer one blockchains. How you doing, Nick?
I'm good, Jeff. How are you
Good.
today?
I'm good. I'm good. This is one of those rare times where I absolutely nailed the call of what was going to happen here and the geopolitical risk, but still didn't really do anything to make money off of it. But it was pretty interesting last 24 hours. We're going to do something different here with That's Our Two Satoshis Live. We're going to talk about the last two blogs rather than the last one because of last week's holiday. We didn't actually do one, but for those who like to follow along, you can go to our website at ar.ca /blog. We're going to start with the one we just wrote yesterday. Then we're going to go back to one that Nick wrote last week and talk about a few different things here. But what I was referring to with regard to nailing the call was this weekend was really interesting, right? We had the Russian sanctions issued, I think on Saturday late evening. Here in Los Angeles, it was late evening Saturday when the sanctions came through. And there was almost no reaction to digital assets. There's like a little 1% blip in Bitcoin that immediately went back up. But really no reaction at all to the sanctions. But then on Sunday, right when the FX markets opened at 5 p.m. Eastern, that's when the euro fell and the ruble fell, and all digital assets got crushed in the process. And then interestingly, at the open, the U.S. Open this morning at 9:30 a.m. Eastern is when everything recovered because futures, naturally, equity futures oversold last night. Treasury started to rally a little bit. It wasn't as big of a calamity as people thought. So my first takeaway, Nick, and I'd like your opinion on this is one, you can just completely dismiss anything that happens on a weekend at this point, right? It's just a bunch of quant funds and algo funds or algorithmic traders that are just piling on every headline. But the real action doesn't happen until the real equity markets are open in Asia, the Europe, and the U.S. And two, I suppose my other takeaway is simply nobody knows what they're doing right now. It is just headline after headline after headline, and it's really difficult to trade this environment.
Yeah, and I mean, I think there had been some study floating around that had shown like the reversals after like a positive weekend or a negative weekend in digital assets, and then you have on average it's actually the opposite the next the following week once the traditional markets open. Yeah, I mean, I definitely think that like the spot buying pressure is a big portion of that. Once you actually get institutional funds flowing into assets, it's not just like futures, algos, and stuff trading. That's like what the real money moving is, and so that's gonna whatever the direction of that is going to be the direction that the assets are going during the week, and that's what's going to be the kind of core trend through over time.
Yeah, it makes sense. I actually ran this analysis a few months ago. I put it in one of our That's Our Two Satoshis, but I haven't updated it since. But I ran the analysis for all of 2021, and weekends were almost entirely mean reverting in digital assets, which is really interesting, right? Because the digital asset market is the only one that's open all weekend, so it often is used to reflect risk over the weekend, but almost without almost without fault every single time the market closed at Friday afternoon, whichever way we went on Saturday, it didn't matter if it was up or down. By Sunday night and into Monday, we reversed whatever that action was, and it was really interesting. Like the analysis was it was only like 2 or 3 weekends out of the entire year where that wasn't true. So anyway, if you're out there trading on weekends, whatever way it goes on Friday night and Saturday, take the other side because it's probably going to revert. All right, before we get into the bulk of what I want to talk about with you today, which is your great analysis from a week ago of our blockchains, layer one blockchains, are they businesses or nations? Before we get into that, I just want to ask you a couple questions on macro in general. I wrote this week, have we just completely lost the plot? In fact, my title of the write up was "Remove all biases and just ask yourself, WTF? Like, what is going on right now?" We have I feel like with all the talk, with all the traders trying to trade every tick of headlines on macro, we've completely lost sight of the goal, which is, remove yourself for a second. Let's pretend you haven't made a fortune on digital assets on the long side, or let's pretend that you're not hell bent on trying to prove that digital assets have no purpose, and just think objectively for a second. Here's some of the things that have happened in the last few weeks. The Canadian government has shut down banking access to its own citizens. You had a single, ruler in Russia, President Vladimir Putin, who in a single act of war has created hundreds of billions of dollars of losses for Russian investors, as well as basically ruined the credit quality of Russia as their CDS went from 100 bips to 900 bips. You have the Western world shutting off Russia from the entire international banking communication system, which is SWIFT. And even before all of this, you had the entire global bond and equity market basically roiled by less than 20 central bank officials between the Fed and the ECB jawboning over the fate of rates. And I even mentioned, like, even my own sheltered world, fortunately I'm here in the US and in Los Angeles, sheltered and isolated from a lot of this. But even in my own world, I tried to send money just from literally one of my US checking accounts to another, and it took me 3 days to do that. So objectively, without any emotional attachment, is the current banking and government system just flat out lunacy? Like, why does anybody have faith in this at this point?
Yeah, I mean, I think it's like that. It's the best system we've got, but all the systems suck. So it's
Yeah.
yeah, that's all we can do, really. But I mean, yeah, to me, it's the best case for like a decentralized global digital payment system and financial system that has ever been put on mass scale and advertised to the public in that way, right? I mean, I remember, what was it, late 2020, when you had this inflation narrative picking up and everybody was turning to all these institutional investors, Paul Tudor Jones, etc., calling Bitcoin digital gold, and that narrative was picking up. But I could really see that becoming a narrative here going forward. Just even in the last few hours, you've had politicians talking about cryptocurrencies and the potential for both positively and negatively their use in payments, and to kind of skirt and to remit, to skirt sanctions and remit to people who are dissidents. And so, yeah, I mean, to me, the point about Russia, basically, one guy imploding their entire economy and their stock market. I mean, that's the greatest case for digital money, decentralized money that I've ever heard.
Yeah, I completely agree. I think, again, if you remove your biases and just think objectively, like, this is not a good system. Like, nobody would start from scratch and be like, what we should do? We should have the entire world's net worth and monetary system be at the mercy of like 40 people in the world's decisions. It makes no sense, right? I mean, this is maybe we've just become so used to the way it is that trying to imagine a different system is just harder than acknowledging the complete abject incompetence of the current monetary and government system. But I think you're right. I think this is a walking advertisement. It's funny. A lot of naysayers, like, they focus on the SEC warpath around whether tokens are securities or not, or they focus on completely unfounded rumors about whether or not a stable coin is unbacked or not. But the reality is, everyone should just be focusing on the monetary system is terrible, and the government, especially at the hands of government, like this is pretty awesome to see in real time what we're dealing with here. And I think for those who saw, and we put this in our blog as well. The Ukraine government, the official Twitter account of the Ukraine government, had a single tweet that just said, "Stand with the people of Ukraine, now accepting donations in Bitcoin, Ethereum, and Tether," and put their public address in there. And this, had 180,000 likes, 10,000, or 50,000 retweets, and they raised a $20 million and counting, in seconds, from people around the world who wanted to donate. That's pretty powerful. We also put a chart in there, and I stole this from someone on Twitter. I apologize. I think it was Sean Lipple on Twitter. But if you took the total value locked of DeFi, which is approaching 250 billion, and you put that just up against all U.S. banks, DeFi is now the 19th largest U.S. bank. After basically 5 years. Like, that's pretty powerful, right? I mean, we're looking at some amazing technology and amazing growth that too many people are dismissing because of the emotions attached to price, instead of recognizing that, like, wow, this is a really much better system. You can send money across the world pretty easily. It is a self-serving bank without anybody pulling the strings. I think we're at an inflection point in the market in terms of the rest of the world recognizing where we're headed. And I think there's a big reason why Bitcoin and Terra Luna, for example, were the market leaders today. We came out of the weekend nonsense, and Bitcoin and Luna were up 10 to 15% from the lows. And I think that's because Bitcoin makes sense in a environment like this, and something like Terra Luna, which supports a algorithmic stablecoin like UST, that makes sense in an environment where banks and governments are basically sanctioning who can do what with their money. So I don't know, anything else to add on there? Otherwise, we'll go to the next topic here. But I think this is a pretty powerful couple of weeks in terms of the growth and adoption of digital assets.
Yeah, I mean, this is kind of pulling back the curtain a little bit here, I guess, or pulling back the frame. But like, I was just thinking, I'm looking on Twitter this week of the power that the distribution of information across the globe, that instant access to what's going on in Ukraine has had on the war and on like the sanctions and all of the fervor in free democratic countries. Towards their government to try to put a stop to the war, and that's just something the internet uniquely created over the last couple decades. And I just I can't fathom what that possibly looks like in 10 or 20 years, but I just try to think about what the impact of having free value flow, free money flow that digital assets will create, and what effect that's going to have on geopolitics and the world in the years to come. I think it's going to be probably pretty mind-boggling.
Yeah, all your old macro buddies must be going crazy right now trying to connect all the dots and figure this out. So I
Yeah,
agree. It'll be really interesting to see what happens from here. And I think it's never easy to do it in the moment, but I bet you know in 6 to 12 months we'll be pointing back to February of 2022 as a pretty big inflection point for why all digital assets and why the overall size of this market is significantly higher than where it is today.
I definitely agree with that.
Cool. All right, let's move on. One of the best things I think we've ever written here at Arca, courtesy of Nick right here with us, is what we wrote a week ago, which is, are blockchains businesses or nations? And for those not familiar, we're talking specifically layer one blockchains here. But I encourage everybody to go to our blog and read this one because it's pretty awesome. But Nick, let me turn it over to you. What was the genesis for writing this, and what do you actually think? Are businesses blockchains or nations?
Yeah, so this has been just an object of fascination for me, I think, since I really got into the space, because I really could never put a finger on how to value the tokens that blockchains have. And I was always struggling for a framework on how to think about what they really embody. And you've kind of had these two different camps of thought leaders emerge. I think the former, the one that came originally, was this idea that blockchain tokens are kind of like equity to a sense. They're basically, blockchains are a decent proxy for companies, and they generate cash flows. They have value, and they have these token holders that are owed some sort of value, and you can kind of value them in that sense, where they generate these fees and they can burn tokens, or they can change their monetary policy in different ways to return value to token holders. And that's essentially what a business does. And that's what I would say, blockchains as businesses. The other camp, I think, has kind of been more like within the last year that's formed, has been this idea that blockchains aren't really like businesses, but more like kind of nations or cities, in that they have this whole governance mechanism of they have a security apparatus and like the proof of work or proof of stake consensus. They have a native economy of all these applications that are built on top of them. They have a currency that is primarily used to like flow value through the economy and to pay taxes in the form of fees on the within the economy. And so you've got these two very different ways to look at it. A currency is valued very differently than an equity would be. So it really kind of changes your entire framing on how you think about the assets and what we're building here in general, the way that you view it.
Yeah, for sure. And it's funny, like, you obviously we've been working together for a while now. I've gone back and forth toggling between the, business and nation analogy multiple times without even knowing I was doing it, right? Like from a business standpoint, I would often look at the fees, right? I mean, I have one of many, I have 15, 20 tabs up at any time. And one of them that I keep up all the time is cryptofees.info, which, shows you these 1 day and 7 day fees that are being generated on these various blockchains. And of course, Ethereum has been at the top of that list forever. And I'm like, okay, well, as a business, that makes sense. Ethereum is clearly a cash flow producing entity. At the same time, I've often, described blockchains as nations, saying like, Imagine, you stumble upon a deserted island in the middle of the Pacific and you own it. And on day one, there's nothing happening there, but there's some option value because who knows what you could turn that into. But eventually, somebody might come in and build roads and businesses and schools, and eventually there will be, its own currency and have tax revenues, and then it does look more like a nation. So I've constantly toggled back and forth with these analogies, but I've never really even recognized I was doing it until you wrote this. For me, I think it's probably a combination, in the sense that eventually it has to be a business, right? Eventually there has to be real revenues and cash flows that accrue. Um, but I almost think of it like, imagine the Apple App Store on day one, right? On day one, somebody creates the Apple App Store. There's absolutely no apps in there, but somebody says, you know what, that's interesting. I'll pay some amount of money for that because the idea is sound. But then over time, as all these apps are built upon it, eventually you have this thriving economy and you have all these transactions and all this revenue and cash flow that accrues back to the App Store. And of course, what happens is, well, when one operating system has success, like Apple had, inevitably someone else is going to come in, and that's where Android came in, and Samsung's competition. So inevitably, that's how I've always thought about blockchains: is they're all blank slates. They're all intended to have somebody build something meaningful on top of it. If it works, you're going to have meaningful cash flows and revenues. And then, of course, there's going to be 100 copycats because everyone's going to try to do the same thing. So, in some way, shape, or form, I think it gets us to the same point. But the way you laid it out certainly opened my mind, at least, in sort of thinking about two competing ways to value some of these entities.
Yeah. Yeah. I mean, I think where I came down kind of after having written the piece was that the idea of blockchains as nations, I think, is kind of the more coherent idea to me, where it fits the framework better, especially since like all of these have their own native tokens, and those are like the economic unit, right? Whereas a business, if you're talking about Apple, they're transacting in dollars, and that's like their final settlement that they're using. Whereas Ethereum is the final settlement unit is ETH. However, like practically, it doesn't really help you value ETH that much, right? A currency is kind of, you can only really think about it in relative pairs relative to another currency. The dollar has no intrinsic value unless you value it against the euro, for example, right? So whereas if you think about it as a business, then you can actually look at the cash flows and do some sort of discounted cash flow model and get like, okay, the value of Ethereum or the value of Ether is $10,000 per token, something like that. So it really, the practicality side, I think, definitely falls on the blockchain as a business, for like an analyst perspective.
Well, you put a pretty interesting table in the blog, right? You put a table in there looking at each of the layer one blockchains and trying to compare, the digital asset relevant metric to what a TradFi metric would be. So, for instance, instead of sales revenue for a traditional company, you would say fees generated for a blockchain. Instead of cost of goods sold, you'd say cost of blockchains sold and stuff like that. Maybe walk through. I think one of them was free cash flow positive, right, which was Terra Luna. Maybe walk through that. Like, how are you thinking about a Terra Luna in terms of cash flows and how you would value it?
Yeah, and I'll probably just bounce around because there are different ways that they kind of accumulate this value. But this again, I'm trying to proxy this really loosely. But what I'm thinking about is at the very top line, these blockchains generate some sort of income, some revenue, and I'm saying that is the fees that they generate. So the gas fees that you pay on Ethereum or on Terra, that's kind of the top line revenue. The cost of block space sold is just the function of how much of that top line revenue is just being paid out as expenses to like promote the security of the network versus how much is actually being returned to token holders. So for Ethereum, for example, you have these fees that are generated, and then 70 to 80% of it is burned via the EIP 1559 mechanism. And so that is directly accruing to token holders. The one big difference here between like a blockchain and a normal business is that one of the biggest functions for most of these that's going to impact how much token holders actually, earn is how much issuance the chains have. So some of these chains are doing, billions of dollars of issuance a year, and then are only generating tens or hundreds of million dollars of fees. So despite having, they have a small amount of earnings, which should be, positive, which means they would cash flow positive. But since they're issuing so much stock or so many tokens, it's actually still quite cash flow negative for the end token holders. And that's where I proxy the SG&A expenses. And so, so Terra doesn't actually have any mechanism for burning any tokens, for generating fees, but it does burn tokens via its stablecoin minting burn mechanism. So when more people demand the UST stablecoin, Luna token is burned. So that's actually the only blockchain I had over the kind of medium term that has been cash flow positive, in the sense that on net tokens are burned. You've got others like Ethereum, Binance is pretty close. Phantom over the short term has been as well, that are kind of closing in on that spot, but Terra is the only one that has been consistently.
Yeah. If you had to guess, though, obviously a lot of financial modeling is based on assumptions of multiples and other metrics that put some sort of a value on top of the intrinsic value of a security. If you had to guess, which of the two analyses do you think results in higher valuations? Do you think it would be valuing blockchains as a business and looking at free cash flow, or do you think it would be valuing them as nations and getting some sort of a monetary premium on the fact that you have this native currency that is, unique to a thriving ecosystem?
Yeah, that's a really interesting question. I think you wouldn't really be able to apply the multiple mechanism on top of the currency thing, but I think what it really implies is like a different sort of market dynamic, right? So maybe in a business setting, you'd think of these chains as much more competitive, much more of like a monopolistic competition, or like even commodity products. And so you'd expect that the profitability of their token holders would be competed away down to a much lower level. Whereas in a nation, like the US dollar has this reserve currency status where 80% of all the global transactions or whatever of oil, for example, are in US dollars. And so if you have this more Pareto distribution of currencies where some currencies just dominate the others, and you're betting on some optionality that one of these becomes that reserve currency, then that leads to obviously huge valuations. But for a very small few, but then others are less valuable. So I think like it's more about the distribution, that the blockchains of nations, there's going to be a few really, really big winners. Whereas if you think about these as businesses, there will be a lot of successful ones, but nothing like world dominating.
Yeah, I think that makes a lot of sense. Well, look, it's certainly thought-provoking. I encourage everyone to go check it out. Again, it's on our blog, ar.ca/blog. It's called Our Blockchains, Businesses or Nations. Read it, look at the tables, look at the charts, hit Nick up if you have any thoughts or questions. Love to hear from you. Also, I'd encourage everyone listening to this to check out the white paper we just released as well, which talks about the BTF, or the Blockchain Transferred Fund. For those not familiar, Arca released the first ever mutual fund that has its shares traded as blockchain-based assets, as ERC tokens. So we are pioneering the term blockchain transferred fund, very similar to the ETF. We call it a BTF, very similar structure. Check that out as well. Check out our blog. Send us any questions. We'd love to hear from you. And that's it. That's our 2 Satoshis this week. And we'll come back next week with more thoughts. Nick, thanks for joining, my man.
Yeah, appreciate it, Jeff.
All right. Take care, everyone.